Hey traders, checking in on the stock market today. So a sideways day in the broader market overall, but that allowed for continued rotation into our growth names. We had our volume clues stand out. From a few days ago, there was a lesson about what to watch for on volume, and the EV space did it in a big way today. We'll check in on that. And there were a bunch of wedges. If you want to practice with wedges, today was your day on QQQ. So we've been watching our 4-hour time frame on the futures chart the last couple of days, and today was just sideways. We can see the S&P 500 set a double bottom. We were close to confirming a 4-hour downtrend, but they held support, and we're still snugly in that range. And seeing it on SPY, low volume day, inside bar, not much going on. Remember this, when you have sideways trading, rotation can take place. I learned this from the cryptocurrency space. The altcoins, Ethereum, all these other smaller coins, they perform their best when Bitcoin is trading sideways in a bullish environment. SPY traded sideways in a bullish environment today, and we could see that reflected on our growth names catching some bids, seeing some volume, and getting follow through. So let's just get into that right now. As far as our growth names, the volume, let's talk about volume. So a few days ago, maybe a week ago, I talked about how it should stand out and you should have a light flash in your head when volume is greater volume on the 5-minute time frame that is not the first couple candlesticks of the day. If it is the third candlestick, the fifth candlestick, the eighth candlestick is higher as the highest of the day, whether it's bullish or bearish, that is notable information. So looking at today, examples of that, I'm going to try and remember them off the top of my head here. But NIO. So NIO, second candle of the day, highest candle. From that point forward, the bulls controlled the entirety of the morning. PLUG, fourth candle of the day, highest bull volume. Not a ton of follow through at that point, but it was more follow through to the upside. Did XPEV do it? They did it in a big way. Volume pouring in after the first half hour. Bulls keep complete control. Did we already look at plug? Yes. Bottom line is EV names saw this happen. Tesla was a laggard. Look at Tesla. 40 minutes into the day, massive bull move up. ARK did it. Perhaps because of their exposure. Third candle of the day. So that stood out. And the bulls showed strength. We also had the biotech sector stand out a bit today. We had... who else in the MJ sector? Our laggards, our laggard growth names had some solid follow through today as well. So again, growth names are where we are seeing rotation. And if we're looking at these names on their monthly time frames with the monthly candlestick closing at the end of this week, on Monday, again, we're looking for bullish reversal candles on the monthly. And then into June, we have to break the high of May for our monthly higher lows to be set. And we're seeing it shape up on a number of candles, on a number of growth names. TAN, XBI. So again, more follow through needed, but we're seeing these consistent little signs that are starting to add up. So the NASDAQ 4-hour time frame holding on a little bit better, but same thing, sideways, not much going on. So QQQ giving us a daily inside bar as well. If the inside bar breaks bearish, daily consolidation to scout a higher low. Plenty of space for a higher low on both QQQ and SPY. IWM, daily chart, nice recovery from yesterday. It was a daily inside bar as well, but after the close at the low of yesterday, nice save. So new key short-term support, 219.19. Bulls need to get over 223.71 to keep this bull move going. XLF. So broke the low of yesterday, but we still have the daily uptrend intact, and that's what matters most. If the bulls hold 36.59, they keep control. And fairly flat with QQQ and XLF today. They were both roughly doing the same thing. So bulls holding fine if the daily higher lows remain. Healthcare, kind of breaking the rising wedge bearish, but again, you could easily just draw this line differently and have it still remaining within this pattern. And again, the bottom line is it's the daily higher lows that matter. So anything above 121.59 will stay a higher low. It is a rising wedge pattern to be watching, but we have to lose the daily uptrend for the bears to prove anything, and that's the same case as XLF. XLE, same thing. We're on the verge of rolling over into weekly consolidation, but we are still holding these daily higher lows. 51.31 held by 11 cents today. So these sectors are close to seeing bigger picture consolidation, but not close enough. Have to lose the daily higher lows for the bears to prove anything. Who's supposed to go here? So ARK had another good day. Again, just follow through off that low. Got to keep this up for another few weeks. Ideally, changing the weekly trends eventually in June. Maybe into July. XLE, XLV, SMH. Who am I missing? XBI? Yes. XBI bulls had a good save today. So XBI had our high of the bounce, daily higher low, lower high, and we held that key support. Close at the high of the day, and it's just a little equilibrium over the last 6 days, 7 days. Bulls will have to break 129.05 for a bull break and continuation. Anything under 129.05, just a daily lower high, remaining in a tightening range. This is a nice pattern to be watching. 4-hour time frame. Nope, stick to the daily. That's where it's most clear. But again, I look at today and the trading, and I see SPY 0.2% green, QQQ 0.35, XLF 0.29, biotech sector 2.1, ARK 1.8, Tesla 2.3, NIO 4.7. So again, growth standing out stronger than most. SMH. NVDA just had earnings. It's flat, non-reaction. Slightly down, less than 1%. So SMH bulls, they were out today, just holding on, again, sideways. Daily inside bar. After hours, I assume we're not seeing much reaction. So if the inside bar breaks bearish, we scout a daily higher low. If it breaks bullish, then the bulls keep their complete control. TAN, daily bull flag trying to confirm. Didn't break it today, 79.30. Oh, we did. Not when I last looked. So we broke 79.30. Daily bull flag confirmed. Another name that is looking for a monthly higher low. It's a bullish reversal candle. We close the month in a couple trading days, 2 trading days. And then from there, if we break the high of the month, our monthly higher lows will be set. And we'll be scouting monthly lower highs from there. But we'll see how much follow through we get. Gap to fill, 81.70. Good day for the bulls after some healthy consolidation. MSOS. Bulls showed up today. Key resistance on the daily, 41.07. We broke it. We need follow through. Weekly higher low is now set. So low of consolidation. High of the bounce is just a lower high. Higher low is now set. And the bulls must break 44.14 for a monthly higher low to be set. We're watching for it. It's healthy consolidation. You could call it a bull flag. I believe you could call it a bull flag. Nah, 50% retracement. We can see continuation, but we want 382 or less in order to see a bull flag setup. So a lot of people are looking and hoping that Chuck Schumer is going to introduce legislation for legalization of marijuana. And that is a potential catalyst for this sector that we are looking towards. I'm not holding my breath because he just keeps tweeting positive things, but nothing ever happens. But TLRY, this is the Canadian side. Bull break yesterday, a lot of profit taking, made it back today and closed at the high of the day. CGC, same setup, but sideways today, holding the gains. ACB, big green day today. So the sector is showing signs of life. And again, I believe this has to do more with the technical setup, the bears running out of momentum, rotation into growth names, this being a laggard sector in the growth sector, in the growth groupings, and it would just be perfect timing to have some kind of news catalyst for a little bit of a push here. But aside from the Canadian names, you got your US names that are traded on higher exchanges. Look at how similar these charts are. This is yesterday where we're still range bound, and then today we get the follow through. That was TLRY just one day back. TLRY broke bullish yesterday. GRWG, the same setup, broke bullish today. SNDL, same thing. Sideways, bull break, and volume and strong close. MJ Sector raising some eyebrows today. Question is, how much follow through do we see? And do we have a catalyst to get some FOMO into the space? The VIX. Weak. Daily inside bar, but a weak close. Daily downtrend. Bulls not proving anything, as the market bulls are holding on just fine. Dollar, 4-hour falling wedge bull break. I sold half of my GLD and SLV swing positions today, and I have been holding those for many months. Why did I sell? This pattern breaking bull, the realization that I really liked my gains on those positions, and if I make a mistake selling, it will be leaving money on the table. I will make that mistake all day. That is perfectly fine with me. I'm locking in those gains. I will rebuy on weekly consolidation next time we see it, even if it goes higher. And again, I love the psychology of partial position selling, because if we pull back, great, I nailed the top and I locked in profit on half my position. If we keep going up, great, I keep making money. It is a win-win mindset if you choose to have that mindset. It is a choice. I could have the opposite mindset. If it keeps going up, I could get down on myself and say, oh man, why did I sell? What an idiot. I would have had this many dollars. And if it pulls back, I could say, why didn't I sell my whole position? I'm an idiot. I kept half of it, and now I'm losing money. It's a choice. Your mindset is a choice. And it's very important as a trader to keep that positive mindset. Way too easy to get down on yourself. This is a game where you lose all the time. If you get down on yourself when you lose, it's going to be a long road ahead to try and come out on top. DXY. So 4-hour falling wedge means zoom out, and now we're scouting daily resistance of 90.29. So 90.29 short-term level, 90.91 a little bit longer-term level. And again, my exit of gold and silver is definitely early. There are some little warning signs, but nothing major. This rising wedge stands out to me. That's another reason. Still holding on, though. Still a 4-hour uptrend. It's entirely possible the bulls end up just fine. But again, taking some profit. So silver, potential daily lower high. If we drop down on silver and break 27.20, we confirm a daily downtrend into weekly consolidation. We haven't consolidated in almost 2 months on the weekly chart. We had very brief consolidation on gold there, but it's essentially a 2-month straight bull move up. And the miners are another reason. No daily bull flag confirmed when the metals saw higher highs. Just little points in the cautionary tally imaginary paper. So key resistance for the bulls to confirm it, 40.13. If we drop down and break 38.60, then it's a failed daily bull flag, and weekly consolidation will be underway. Oil. Oil's been choppy. Are we doing another broadening wedge inside a broadening wedge? No. Forget that. So daily time frame could be, it's the cup and handle psychology. Resistance, recovery, inability to break resistance, little bull flag. This is the inventory report reaction. Not clear. If I look at something and it is not clear, I don't trade it. I go and find something that is clear. There are so many charts and setups out there. There are a lot of clear setups if something is not clear. And for me, oil is not clear right now. What is notable is the energy sector is right down near support, while oil is right up near its highs. So keeping an eye on that. Natural gas daily bounce continuation. Watching the 4-hour higher lows for signs of when the lower high has been set. New support is 2904. And anything under 312.2 is a daily lower high. Size of the bounce retracement will help us gauge what is the most likely scenario. And at this point, that bounce size is 50%. So creating some space for a daily high or low once we do top out, possibly. QQQ, let's look at those rising and falling wedges. So live streaming this morning when we got a 2-minute falling wedge. I wasn't really trading today. I traded crypto yesterday after the market close. Had some nice wins. And because I'm trading crypto more, I know for the longevity and for my mental health to trade stocks less. Because if I try and do both with the same fervor, if that's the right word, I will burn out. So the last week has been crypto week for me. For the first time in a long time, taking advantage of that volatility and opportunity. I'll be back to stocks. They're not going anywhere. But again, just not trying to burn myself out. I'm watching after hours action on SNDL because I did swing a position. Looking for a gap up open tomorrow. Like the volume, like the close. We'll see. So QQQ. How do we know to look for a falling wedge? Well, number one, QQQ does it all the time. When you're looking for an hourly high or low, a 2-minute falling wedge or a 5-minute falling wedge oftentimes happens. Tesla does it all the time as well. So again, it's a low of the day at 333.12. We break the low of the day by 17 cents straight into a bounce. Then we hold the low of the day by 3 pennies. It was a double bottom into a 2-minute trend change. So a 2-minute falling wedge. And right here, just a hypothetical trade I was talking about. Say you make an entry right now, put your stop with some wiggle room. Again, you have to give wiggle room. And that's the thing about falling wedges. If you want to trade falling wedges or rising wedges, you're not playing off support or resistance. Because by definition, the pattern is breaking support and resistance and just not seeing follow through. So the trade has to be based off of price or dollar risk that you're willing to take. So if I'm entering at 330, 310, and right now I'm looking for at most one more lower low with no follow through, I'll put my stop down at 332.74 and give that wiggle room. And just ensuring that that risk is perfectly acceptable for me to take. And then we get big time follow through, and the risk to reward there, obviously very favorable. $1 to the upside versus 45 cents to the downside. And it was more than $1 to the upside, but just that initial move. And my style on playing wedges, once you get the bull break, I sell half. And I am then risk free. Can't lose. Stop under the low and see how much follow through we get. From there, we had a rising wedge. And the rising wedge broke bearish in a big way with a lot of follow through. So again, a new high of the day by 16 cents into a little pullback, a new high of the day by 12 cents into a pullback, rolls over. And again, if I was playing here, I'm not playing off a resistance level. I'm playing a bit behind resistance and based on dollar risk. And then from there, did we do it again? We did. So those two wedges. Then from there on the 5-minute time frame, and at this point in the day, I was posting this third wedge, and I said, no way are we about to see a third wedge in a row here. And we sure as heck did. Double top, break a support, lower high, follow through. So a day of wedges, an inside bar day, but there's patterns to trade there. Just smaller ranges than normal. I keep looking over to my left because the bulls are making a move here in extended hours on SNDL. All right, that's what we got. I hope you have a good rest of your day. I hope you do a good thing or 12. And we'll see you over the weekend if you're a member and Monday if you ain't. Perennial flowers all coming back. This is yarrow taking over. I'm going to have to trim it back in the fall. And the milkweed is starting to flower. It's probably the reason I won't get many strawberries this year. I could put a fence up, but Who cares? Starting to clear the greenhouse out. This dill is monstrous. Cabbage.